Yo guys, what's going on? Welcome back to another weekly forecast. Before we get started, I'm going to quickly run through the VIP results as usual, break down the trades we sort of took, and how my sort of mindset was during the week. So we start off, obviously you can see there's a lot of red X's this week, and that is because we did take a few losses in a row. It's a part of the game, but we need to, as I said here, we must always stay consistent in your risk so you're ready for weeks like these, because if I sort of start increasing the risk, this starts to eat in the profits that we made sort of last week or the week before. So if we stay consistent, then we know that, okay, we have minimized as much as we can, and we can sort of move forward into the next week. We just always look forward to the next week, because there's always going to be opportunities to sort of come back. You'll get weeks like these, but then you sort of want to sort of reset on the week and come back in the following week. One thing I wanted to mention is this image right here. Right here. So this is the main sort of trade that we ended up missing out this week on gold. We did look for it, as you can see here. I was looking for something like that, waiting for the low to break. This is on the free channel, by the way. So if you guys are not in, the link is in the description. But as I'm trying to say, we were looking for a break of structure here based on this sort of uptrending pattern that we have. We have the highs taken out here. We're looking for the lows now to be taken out, and then for price to continue. As you can see, price did do that. That's the same high. Price then took out this previous low, and you can see on the retracement here, I was expecting price to sort of move down from here, and I gave it a 50 pip stop loss. Ideally, yes, stop loss should have been above the high, but I didn't want to, I took the assumption that, okay, hopefully that price doesn't get that far, and the stop loss was a little bigger, and we were expecting the price to just tap and sort of start falling, but you can see that price gave us a bigger retracement, just took us out at at stop loss here, and then price decided to say that, yep, I'm going to start falling down now. This is a delayed reaction. If we go to the charts and we have a look at the timing that this all happened, where are we? Where did this drop start happening? Let me just check the date on it. It's around about the 20th. 20th. Oh yeah, it was here. Okay. Yeah, I remember it. So it was this sort of move that we ended up happening at London session, and then price sort of started slowing down here, and then we ended again at 10:50 and 10:30, and the main move happened at 11 a.m. New York time. Normally we sort of look at sort of that 9:30 to 10 area, this move here, for the price to start moving, but you can see that price sort of gave a bigger retracement up, and I just didn't like the trade. I wanted to sort of get out of it, so I closed it earlier, hence why you see 0.4 on the results. But you can see that it would have ended up tagging us out at stop loss anyway at 23.31, and then price ended up sort of saying that, yep, I'm just gonna fall now, and then that would have been a nice sort of 200 drop that we end up could have catched. But we don't want to sort of dwell onto that. We just move on to the next move. So you can see that what my main aim for this week was to see price fall into discount. So move up, move down, and then continue its push back up. So if we sort of get a fib from the bottom here to the top, just going to switch this from that to this, and you can see that there's your 50% level. There's your low. This is your range at the moment. You want to see price drop into this area here, and then look for, and this would be your sort of discount area. Where's discount? There you go. And we sort of move this across to the right, see where price dropped. There you go. So price did drop 50% into this kind of area here, and this is where you start looking for your potential buys from here. I did see a reaction from this area on the right here. I was looking for a potential move here for the VIPs, but I just was all over the place. I had to leave and just ended up missing the right opportunity to get in. And then once I look back at it, it was just like, damn it, I missed it, and I think I could have held that trade towards these highs, which we'll get on in a moment. But that was the main sort of move, to let price drop into discount to push up. If we look at the week before and we see what happened, we have the same sort of thing here, where you have your impulse move, which is from here to here, like so. You can even use this low here to this high. Where did price drop? It dropped into discount, pushed up. Obviously you get again retest, and then that's when we ended up giving that main push towards the upside. And the same thing happened here again, where price dropped into discount. And this was towards the end of the week at Thursday, Friday. So again, Monday, Tuesday, Wednesday was all sort of chop. Before Thursday, Friday was the main push up. The same thing happened here, where sort of Monday set up the week, Tuesday, Wednesday was all chop, Thursday dropped back down right there, and then Thursday, Friday was the bullish move. Similar sort of thing happened here. You can see that price tapped into the discount buy area and then started pushing these highs and will likely continue its push up here to continue higher. But again, this is what I'll explain a little later after I do finish the breakdown. So the main reason, once I seen price sort of drop into here, you can see that price has now retested this whole manipulation area which we have here, where you can see that price is bouncing off this area. Price came back into this area and started pushing up. I was expecting a little bit of a deeper retracement, possibly to touch this level here, but again, if you look at the daily time frame and zoom in here, you can see that where these prices ended up touching was just to fill this daily fair value gap up. Look at that. That's your daily fair value gap fill, and then price ended up rejecting, closing back outside of the daily fair value gap, which is a very, very bullish sign. And again, 50% of this whole sort of impulsive move from here to here, price dropped into discount. This is where you should be stacking your buys and then continue the move towards the upside. So one thing I wanted to also touch on was, how do you look for retracement from this area here? Now, how do you look for buy positions from this? So you can see on the left here that price did use this sort of 1 hour fair value gap. If I draw this across, you see how that price is touched there. Has this sort of move been used before? If you mark it to the left, interesting. Price has bounced off there to push down. What's so significant about this? We then move it across here. You can see that this here is a 1 hour fair value gap which was used here. Then it was flipped into an inverted fair value gap right here. So price potentially should use this as support. Look at that. And again, this is very hard to notice if you don't have it marked up or you're not looking for it at all. It's very hard to see why price bounced off there. You can just see that, okay, price is on 1 hour fair value gap. Yeah, it just bounced off there. You can sort of make it make sense. But once I looked back at the chart after this sort of rejection happened, this would have given me more confidence to say that yes, price should not go back below this area, because it's bounced off this inverted fair value gap. We should use this to push higher. It's in the 50%, give it a crack, stop loss below the low. But then if I drop down on the smaller time frames and start looking at your potential entries, once price rejected off this area, say if we had this 1 hour fair value gap marked, this inverted fair value gap box marked before, let me remove this. This is how I would have sort of looked at the market, right? I'd be like, okay, now the price is rejected after 1 hour fair value gap. Price should not close below this level here, right? The bottom of the box, right? Price can tap into it, yeah, but I want to see price immediately start rejecting. So we're looking at this now. I was looking for a sort of breaking structure, right? Where price push low, push higher, push lower, and then continued up. And that's exactly what happened here, where price ended up pushing lower, retrace back there, push back into this, and then you sort of seeing a big push up. Then you're likely to see a retracement to continue higher. Now, is this move which I was looking to get in right here, just to say press buy here, stop loss below the low, and then continue higher. But then once I seen this, I was like, oh, this is a bit, what's going on? But you can see that how price still managed to close within this box here. So you could potentially wait for this move to happen, then price to get back into here and then go again. So then that's your initial 1 hour, 1 minute fair value gap right here. And then you can say that this is your second one, and you can draw it across, and that is where you got the extra confirmation that price is now using this to flip into a bullish structure, because price is not breaking any lows. We are basically just bouncing off these structural levels to start pushing back up now. So we're using these bullish candles as support to push price back up. So the bearish candles now push into the bullish candles, like this order block here, and then price then got pushed up again. And then you can see once price tapped after that, we came back, had another retest just for you guys, and then price got up. So that was your double entry there, and you potentially could have got another entry off this level here once you saw price drop back down. But then from that point onwards, look what happened. Price never stopped and continued its push up. So I was disappointed for the whole week once I saw that price was going up, because again, we've caught a move like this before, and I'm going to recap it just for you guys. I'm going to scroll up. Where did we catch a move? Something like here. Price is now initially dropped, right? We see a big move up, wait for a retracement, gain to the buy, and look what happened. We were able to hold this trade from here, which is the low, and we held it from Thursday and Friday. That was last week's. This was the week before the week that just gone. So you can see the 16th of August, the same sort of move happened. And that's why when I was looking back at the market, I'm like, we've already caught a move like this. We know the probability of this sort of trade. And because the timing, the days, it's Thursday, Friday, we've now dropped into discount towards the end of the week. This could be a very probable move. Now looking at it, this whole move would have been a nice 400 pips and potentially even more, because we still got some more targets going into next week. So that's what I'm saying, guys. Like, it happens to all of us. We just got to sort of just pull the trigger. But, for me, it's probably because we're running a signals group as well. So it's just that sort of thing in the back of your mind that, oh, what if you are wrong? This might affect other people. This affect your group. It's loads of factors. Again, if you're just rolling this by yourself, you know your own risk. You can just take it yourself. So, and this one, I was just like, no, I'm not going to get involved. But this was the whole point of the weekly forecast. The weekly forecast said we're expecting price to sort of push up a bit, give us a big retracement, and then continue its move higher. That was the weekly forecast, and we should have just stuck with it. But I was still expecting for price to sort of potentially push lower and then push higher, but we didn't get that. So going into Friday, just a quick recap on Friday. I was watching this 1 hour fair value gap, and I said this on the group here, saying, okay, at first I was potentially looking for a bearish move because price did retrace. So I was saying I would like to see something like this. But then I mentioned this, monitoring how price uses this level. Always be wary of 1 hour fair value gaps, as price may look like it's dropping, then completely reverse, waiting for JP. So you notice this 1 hour fair value gap level? I have 2 arrows here because I'm saying that price could push down, use it, and then push lower, or price could just use this level and push up because it looks like it's about to fall. But we still have these targets above, and price has now made the low of the week, which is here. So price could just continue its push up here. What ended up happening? Price used this level. We had a big push up with JP. And then there was potential areas for entry, but then I just got distracted. This whole week has been absolute shambles, and you can see it in terms of the results, but this doesn't happen all the time. We just have to be honest here. Similar sort of thing. 1 hour fair value gap. Okay. How do you could potentially take a risk and put that stop loss below the low here and continue this move up because it's keeping higher highs. So we're not expecting a new low to be created. So you could potentially get into a move like this where you're waiting towards JP, see price pushed into this level here. Your stop loss will go below this low, around about 45 pip, and you can take it higher. Why am I buying here? Notice how this 15-minute fair value gap gets tapped right 15 minutes before JP speech. So there's still liquidity sitting here. There's a 1 hour fair value gap price is using. Price is now tapped into the 15, stop loss below the low. There you go. Yeah, that was one possible trade. The safer trade is to wait for the release to happen, wait for the speech to start, which is at 10. Okay, price is now kicked up. This is for a lot of people who are trading funded accounts who can't trade 5 minutes before or after the news, right? So you want to trade 5 minutes after, fair enough, right? So there, 10 o'clock, 10:05, all right? Now you can look to get into entries, but where would you enter? Simple. Once you see a big impulsive move, all you have to do is just, and again, forget all of this has happened because I was looking for this stuff anyway, but I just got dragged away from the charts. You want to wait for price to drop down into the discount buy area, and this would be your potential area to buy. Forget about the this point here. I would have, knowing price dropped into this, I would have bought here. You would have bought here, and we would just stop loss go. Let's have a look. That's around a 60 pip stop loss. I potentially wouldn't want to see price to push all the way back to this low, so I'd bring my stop loss a little higher just around about this area. You have this whole zone to play with. Then price could like fill the whole 10 o'clock candle. You have a bit more move towards the downside. But if it gets any lower than that, I'll expect a full reversal. So you can see price is using this as support here, this order block that we have here. Price push down, big push up, price came back down into this area, and then what has price decided to do then? Start pushing back up and still holding up now. So from this discount buy area, price is likely to hit these highs here. So that's enough of a breakdown. Let's get into the weekly forecast here. I hope you guys enjoyed that. If you did, obviously leave a like or a comment on what you sort of learned from that sort of breakdown, and has this sort of affected you, because a lot of moves sort of do run away from us, but we just got to always be ready. Potentially we should have just waited for this buy. That is something that I'm thinking of as well. Maybe because there was loads of trades on Monday, Tuesday. Monday I missed the trade, yes. Tuesday we entered again, stopped out. Wednesday, what a week, crazy. Anyway, Wednesday it was absolutely all over the price, and then Thursday we ended up getting the drop, and then we still missed the buy. Like we were waiting for a week. But yeah, one of those weeks. Disappointed. On to the next. Right, going into this week's forecast, let's have a look at what's going on. Price is super bullish, crazy. Right, you can see the price moving up. Here we go. We had a bit of chop here. Price got back up, built the liquidity, charged up, exploded. Now price retraced that explosion, and now it's moving back up towards the upside. Right, plenty of bullish targets here. Okay, plenty of targets. First, we want to see these highs get taken out. These highs will be the first target immediately. You either get that at the start of the week. What's this here? What's this? All right, durable goods, and then pretty much 29. No, that's the week after. So in terms of the news, going from the bottom here, obviously I do check Forex Factory for the VIPs at the start of the week. But in terms of news, it doesn't seem that busy. So we want to see price just continue this move to take out at least a key target, right? Which are these highs, and then these highs are the key targets. Right now, it's just cleared up these highs, so it's not fully finished. You want to see price sort of continuous push up. If we get a chance to get in on this move, I'd say, where would we look at? Any sort of, you know what, it's not as clear to be honest, because I genuinely still think that price may continue its push up. You have obviously the 1 hour fair value gap, which is created here. So any taps into this, and if you see price should hold off this level to push higher. So if you see any of these, yeah, you can get in on your buys and continue this move towards the upside. But this is your first target. You may get some sort of retracement from this level, or price may continue up. So I'll put two scenarios down. Price may pull back and then attack this. So these are your two key targets for this week, right? I'm expecting for price to continue. The high time frame shows a lot of bullish pressure where price wants to continue higher. This is your swing point, I'd say. So if price goes below there, then we're looking for bearish price action. We're switching bias, but for now, just bullish. Target these highs, and then you should be safe this week, right? This high is your key, like safe one, where price should get, there's a higher probability of getting there, and then you want to see what happens. Does price want to continue higher? If this happens, then we could see a bearish move from this high if it happens all in one go. But if we wait and get this move where price gives us a retracement, then it starts attacking this high towards the end of the week, this will be your main move for the week. So we want to see how quick things happen. If things happen very quickly at the start of the week, we can then look for bearish moves. If things take their time and start charging up like something like this, then we can look for this move towards the end of the week. Similar sort of thing, right? Let me just quickly give you guys an example of what happened last week. You can see from Monday what happened. Price pushed up, and then we ended up getting chop, all the way for Thursday. Price pulled back on Thursday. So that would have been your main move. Why? Because we had left equal highs and we left the high there. So that would have been your main move. If price did something like this, well, Monday, right, example, Monday pushed all the way down, right, and then we ended again chop, then you would have got a straight clean move towards the upside like that, because we already got the pullback. But then we potentially, say this is Tuesday, right, we could have ended up getting a big full Thursday, Friday, right? Because the move to the upside and the retracement has happened. So it's left this liquidity here, then price could fall back down. So it all matters in terms of where you are on the time of the week. That all fits in, and this is all like a skill. It's very hard to teach. This is something that comes over to, like, you acquire over time of trading quite often, especially when you're trading on the market. Let's have a quick look at US30. Yeah, we were trying to look for this bearish move, but looking back at this, yeah, it's crazy. We ended up getting a big drop on Thursday, and then Thursday evening, we ended up getting a push up here, and then we were looking for just a little sort of move, or potentially, which is right here. We ended up getting that, where price did give us a push down, hence why you see the 0.5, because we did take some partials, and then price ended up completely reversing, taking us out entry. Whoever put the stop loss at entry, well done. Taking us out, and then this shows that price is still very bullish. So again, why is this? This looks like price hit a low, high, lower low, higher high. This is now becoming a breaker block, and that is why price decided to use that as bullish support. I left US30 after price continued higher. It's just been way too busy again. Life just gets in the way, doesn't it? So we just left it, but you can see price use this to push higher. So I'm working on a better strategy which will help us with US30, because right now we tend to focus on New York Open, but what happens with New York Open is that price manipulates either way. So if you look at this purple box here, you notice how price took out the high of this box, right? And the price came back down to take out the low of this box. So very, very interesting stuff here. Why did price have to come back to the low of this box and then push up? This is a manipulation zone, so I'm working on a strategy to see how we can capitalize on both sides of the moves potentially, or maybe on just one other main move. So bear with me on that. It's going to take some time. I'm going to have to work on it every single day. But gold, pretty much straightforward stuff, bullish moves only. It's been a waste of FX. Peace out.